All right, so it looks like the market had a little bit of fail today. Um, at one point, the Dow dropped as if down a well over, like it was 995 points. And it was funny because I texted, I texted my brother. I said, Dow's over 300 points. And then a couple minutes later, I said, Dow's down 400 points. And then when I was trying to send it, I was almost 700. I think is what or maybe it was 5 to 7. I don't know. It was ridiculous. And finally, I just called him and I said, "Dude, it's down over 900 now." He goes, "What are you talking about, 900?" But that lasted like maybe a minute at the most. So there was some sort of, I guess the best way to put it was the CEO of the New York Stock Exchange, or if that's still what it's called, said that he thinks that it was simply there was so much volatility and that essentially with all the automation and the high frequency trading, these computers kind of just do their own thing. So that, from what I understood, there were orders that simply had no one to meet them. Now, I'm not an expert on this stuff, but I'm just kind of relaying what he said. So, like, someone's putting out, a buy order for Procter and Gamble, let's say, and there weren't any buys. No one wanted to buy it, and so that caused it to plummet. And from what I understood, there's a possibility. I guess they may have paused it. Whatever. Long story short, it was a computer glitch. At least that's what they say. I'm not so sure. I'm very paranoid. But the market ticker, Carl Denninger, he does a good write up on this. Shall we talk about risk, the market? That's a weird. Shall we talk about risk in the markets, and in particular high frequency trading and direct exchange connected computers? What started this right here? Now this is a look at Procter and Gamble, from 60 to 39. It looks like that trade appears to be what set it off. Here's the problem: as soon as that hit the Dow, it dropped the index hard. The response and the computers connected directly to the exchanges was instantaneous and produced this. And so that was a big. That's why they're saying that it was a fat finger trader who made a mistake and accidentally. I don't think that's true, actually. From what the CEO of the NYSE said, is that it's probably not that, and that it's probably simply an automated, computer triggered sell-off. So computer triggered, and the result was more than 1,000 point sell-off, about half of it organic, and the rest on a bid collapse driven entirely by the HFT computers that took less than a minute. Now that's not the only oddity. There were plenty of wild moves in both option premia and the FX. I can't read this crap. You know what? I've got it cut off here, so only FX just before it all went down the toilet. But the computer trading systems with no humans actually feeding them orders, that is, autonomous robots, did exactly what they were programmed to do. There is absolutely no protection against this sort of thing in the market for the average investor, or anyone other than the HFT boys. Stops don't work as there's no bid during these events. There was literally no bid in the futures for about 30 seconds, then no offer on the way back up. This sort of thing has to be stopped. This was not humans. It was pure computer algorithm trading. If you had stops set, you got blown out way below any reasonable trading range with no recourse. Margin requirements were raised instantly on futures, which surely didn't help. So that's about as much as I can read. He's just kind of explaining. I mean, it kind of makes sense to me. I think I kind of get the gist of it. As much as I can, because I'm not an expert in all this shit. So it kind of looks like there was a bit of foobar going on. I mean, it's a bad day. Tomorrow's probably going to start out pretty bad. But the 900 may in fact have been the 995. 995 may have in fact been an aberration. So just take a look. I'm going to try to put a link below. Go ahead and read that, digest it. It's Carl Denninger, but for him it's actually pretty easy to read.